Major corporate players are finding the need to be more agile in navigating the shifting sands of geopolitics. Apple announced it was spending $500 billion in US investments. Others are moving faster to shed off as many staff as higher inflation lingers, and labor activism may be taking a backseat for a different nationalist mood in the US. Roles are also being redefined as technology investments are being ramped up. Hello, this is Bode Oshosami on Global Business Insights, where we look a little deeper at the main business stories. Just out, Germany's fourth quarter gross domestic product growth was confirmed as minus 0.2%. That's a drop of 0.2%. Germany's Chancellor-in-Waiting, Friedrich Merz, is also reported to be seeking a way to get around borrowing limitations to beef up a dilapidated military, a move that could also boost the defense sector. The Chancellor opened coalition talks with the Social Democrats to quickly approve $210 billion in special defense spending. JP Morgan Chase Chief Executive Officer has said the US government is inefficient and in need of much improvement, even as the Trump administration terminates thousands of federal employees and moves to dismantle agencies, including the Consumer Financial Protection Bureau. Donald Trump also reiterated yesterday that sweeping US tariffs on imports from Canada and Mexico will go forward when the agreed 1-month-long delay on their implementation expires next week. US stocks attempted a rebound after Friday's steep declines. Nvidia earnings this week could boost US artificial intelligence stocks. The ongoing pro-market leadership transition in Germany is also helping sentiment. US stocks still sold off after President Trump said tariffs on Mexico and Canada would go forward on time and on schedule once a month-long delay is over next week. India and the UK have resumed free trade talks nearly a year after negotiations were paused. Jonathan Reynolds, the UK's Business and Trade Secretary, met his Indian counterpart Piyush Goyal in Delhi yesterday as talks focused on closing a balanced, ambitious and mutually beneficial deal. The familiar sticky points include high tariffs in India on Scotch whisky and relaxing fees and visa rules for Indian students and professionals going to the UK. India has one of the most protected economies in the world. As trade offers new opportunities for recalibration, we see a trend of shifting to bilateral deals. This is between large, growing, emerging economies with still fertile consumer bases and rich but saturated Western markets offering services and high tech capabilities. Broader trade pacts like AGOA, that's the Africa-US Growth and Opportunity Act, will see less traction, but major trade hubs like South Africa, Egypt, Nigeria, India, Malaysia will be sought out for more focused bilateral collaboration as countries like the UK, Germany and the US need new markets outside China for trade. Crude oil prices firmed slightly higher as supply considerations continue to clash with demand slackness in a tepid global growth scenario. The context is rife with geopolitical uncertainties, with a cloudy Russia-Ukraine peace dynamic and potential increased supply from Iraq as it resumes supply through a pipeline to Turkey. Still, a lackluster Chinese demand scenario has kept Brent crude bound in the $70 to $75 range, that's per barrel, occasionally breaking out of that range. The scenario of peace between Russia and Ukraine at whatever the cost means easing of Russian sanctions and more oil supply, also as the US accelerates expansion in its production base. Chevron yesterday said it was reorganizing its business structures and reshuffling as it simplifies its operations and cuts staff by 20%. Chevron needs to offset costly overruns and delays in a large Kazakhstan project as its $53 billion acquisition of Hess is stalled in a court battle with ExxonMobil. It's not all big spending on AI, as Microsoft cancels an unspecified number of data center leases amid the artificial intelligence spending boom. This is as analysts continue to scrutinize patterns in spend on artificial intelligence infrastructure. Indonesia and Apple are close to signing a deal to lift a ban on iPhone 16s. Indonesia had banned the iPhone 16 in October after Apple failed to meet requirements that smartphones sold should have at least 35% locally made parts. Indonesia's investment minister has since said Apple plans to invest $1 billion in a manufacturing plant to make parts. Saudi Agriculture and Livestock Investment Company SALIC, a unit of Saudi Arabia's sovereign wealth fund, is set to acquire 44.58% in Singapore-listed Olam Agri for $1.78 billion in the first tranche of the deal. A joint statement further stated that upon completion of Tranche 1, SALIC would own a controlling 80.01% stake in Olam Agri. Our deep dive is on the ongoing corporate consolidations and restructurings, what is changing in the dynamic on how corporates are positioning their operations. Apple yesterday said in the next 4 years it would spend $500 billion in the US, including a giant factory in Texas for artificial intelligence servers and adding about 20,000 jobs. Apple plans to build a factory in Houston to support its Apple Intelligence AI system and opening a manufacturing academy in Detroit. It confirmed that a large majority of new jobs will be research and development, silicon engineering jobs, software development, and machine learning. Apple's pledge also includes much spending benefiting thousands of suppliers across all 50 states, investing in Apple Intelligence infrastructure and data centers, corporate facilities, Apple TV Plus productions in 20 states. Analysts, however, said some of the spending was already planned. Apple plans to also double its 2017 US Advanced Manufacturing Fund from $5 million to $10 million. The fund gives grants to US Apple suppliers to support their advanced manufacturing research. Meanwhile, Starbucks is also eliminating 1,100 corporate jobs as it increases efficiency and enacts changes to revitalize the company. Chief Executive Officer Brian Niccol announced the impending restructuring in January, saying workers affected will be notified as early as this week, as corporate employees were asked to work remotely the whole week. Starbucks said it's looking to removing duplication and will be slashing layers of management. Southwest Airlines also said earlier this month that it planned to cut 15% of corporate jobs in its first ever round of layoffs. A major learning from all the homeshoring, near sourcing, remote work experimentation is the discovery of new efficiencies and better tools and ways of working, as many are not returning to the office and they also are not being replaced. When you add fresh cost pressures and softer sales, companies are discovering they can do with significantly less staff. And this even before leverage on new automation gradually being assimilated. Old legacy roles like traditional engineering are now being replaced, as we see in Apple and many of these big tech companies, by newer silicon engineering, software development, AI, machine learning skills, which are better paid jobs. And also big players like Apple are learning that they cannot ignore new opportunities and threats driven by geopolitical considerations. Supply chains are being revisited to reposition for a different east-west dynamic, and others just want to find out how they can gain exemptions from US tariffs. CEOs are now compelled to be 10% politicians, especially where their footprint is at a scale that cannot be ignored by the state. What we're also sensing is that as less and less hands are needed and productivity improves, more time and maybe money will be spent for leisure, and opportunities are now targeting that leisure space. We already see advertising targeting leisure becoming much more creative and tech enabled than ever. According to Accenture on its work with Uber, take for example, you arrive at work on an Uber trip when an ad gives you a discount for your go-to coffee shop next door, or while on your Uber ride home, an ad reminds you that your favorite TV show has a new season coming out next week, or brings you a movie trailer targeting your tastes and showing later in the evening at the theater nearby. Uber has found new seamless IT-driven ways to get you to part with your cash. Since launching a new Uber advertising division in 2022, already surpassing an impressive $1 billion in annual revenue run rate. And we are seeing this seamless, subtle, not in your face, but very effective technology-driven advertising already making waves and making an impact on the bottom line. Asia Pacific markets traded mostly lower after Wall Street fell overnight as comments by Trump on tariffs soured sentiment. Also, as analysts digested the Bank of Korea's interest rate cut decision. In South Korea, the central bank cut rates to 2.75% from 3% as it aims to stimulate a slowing economy. 2025 GDP growth forecast for South Korea was also reduced to 1.5% from 1.9% in the November forecast. The US also reported to be looking to expand Biden's chip curbs against Beijing, seeking further export controls on chips by Nvidia. China's foreign ministry has responded, saying the US plan to curb exports to China and other measures against Beijing, including coercing other countries into going after China's semiconductor industry, will backfire. Talking of volatility, Bitcoin plunged below $90,000 to its lowest mark since mid-November as the Trump rally fizzles out. Bitcoin was down by as much as 6.1% to its lowest point since November 15 at around 89,400 in early London morning trade. Other cryptocurrencies also fell, with Ether and Solana down roughly 10%. Analysts are of the view that the recent fall is related to broader macroeconomic uncertainty and especially the mood following tariffs announced by the president. Well, that's all we can take on this episode of Global Business Insights. You can watch us on Business Day TV YouTube channel Monday to Friday at 11 a.m. West Africa time. Thanks for watching. This is Bode Oshosami. Bye-bye.